Hey, what's going on, guys? Max here with Because Bitcoin, and today we're going to be talking about a very important strategy for long-term DCAing into Bitcoin and Ethereum specifically, and what, in my opinion, is a very appropriate baseline for gauging your performance as an investor or somebody that's exposed to the crypto asset class. We're going to go a little bit deeper and bigger picture than just charting Bitcoin and Ethereum against altcoin pairs and vice versa. So we're going to start basically right here. We're going to be spending a little bit of time today talking about Bitcoin against US money supply, and then also Bitcoin against major TradFi indexes. So let's just start with the quick definition. We won't spend too much time getting into the weeds on it because we'll let the charts basically paint the picture for us. But we're going to be doing some comparisons for, again, Bitcoin against M1 and M2 money supply. So I just put a definition here for you guys. If you're not familiar with it at all, you can do some Googling beyond this. But M1, M2, and M3 are measurements of the United States money supply, known as the money aggregates. M1 includes money in circulation plus checkable deposits in banks. M2 includes M1 plus savings deposits less than $100,000 and money market mutual funds. We're not going to be talking about M3 today, so let's dive right into the charts here. So first, I want to basically just point out the obvious here. So basically going back to middle of last year, summertime, of 2022, M1 and M2 have both been decreasing. Now, of course, this is right in line with what the Fed has been doing. They've been attempting to basically pull liquidity out of the system, hiking interest rates. We don't need to have a whole discussion on that, but you can see it's abundantly apparent that the U.S. money supply basically has been dwindling since summer of last year. And there's a little bounce here for M2, but nonetheless, it has been pretty consistently decreasing. And of course, as money supply decreases, it's not exactly prime conditions for a bull market. Typically, you want to see a little bit of inflation with money supply moving upwards because that can actually be very good for risk assets. But let's check out how Bitcoin performs against M1 and M2. And I think this is really a nice barometer that can help gauge, when it's time to really start aggressively entering the market, and when the next bull run could be commencing. So let's start with M1. This is actually probably the most interesting high time frame chart that I think a lot of people overlook. So this is how Bitcoin looks normally, right? Let's just do a quick reminder in case we've been under a rock for the past 5 years. Bitcoin forms these nice, big, long parabolas. When you adjust Bitcoin for the M1 money supply, you basically get a chart that looks like this. After the 2015 through 2017 cycle of Bitcoin hasn't really outperformed or tracked, or you haven't really gained too much wealth as measured against the M1 money stock. So basically, from this point to this point, Bitcoin has basically just been in a range against M1 money stock. So a very useful strategy, for trying to time these moves could effectively be trying to purchase Bitcoin when Bitcoin divided by M1 SL, so the M1 money stock, is down towards range lows. Now, granted, back in 2020, before the last bull market, we did have a deviation, but this is a pretty clean range right here. I mean, very, very clean range. So now let's pull up Bitcoin below and just see what Bitcoin looks like in US dollar terms for a point of reference. So if you had bought Bitcoin at this range low right here every single time, again, this is interesting because we actually deviated below the range low. It was weird with the COVID drop. So I mean, again, when you get a piece of data that's a statistical outlier, sometimes the chart can be a little bit goofy. But in theory, if you had been buying this range low for, again, Bitcoin divided by the M1 money stock, it's a pretty useful, indicator for where to buy and for when to sell. Now, again, at the same time, let's look at market tops, right? Put this in a different color. It's in green. Top, another top right here, local top. So you can see it's pretty consistent, right? Whenever you were at these range extremes for Bitcoin denominated in the M1 money supply. It's been pretty good. It's been a pretty good signal, and there also is some very interesting interactions here with the mid range. So definitely something to keep an eye on. I would highly recommend, at least just keeping an eye on it, maybe setting some alerts so that if Bitcoin divided by the M1 money stock does end up moving back down to range lows, somewhere around here, this is potentially when it's time to, re-enter the market or start accumulating Bitcoin. So when M1 money stock begins to expand again, and maybe Bitcoin in US dollar terms is pulled back, you can jump on it. And again, going back to 2018, it's been a pretty reliable signal. Let's move over to Bitcoin divided by the M2 money stock. You'll notice it's very similar to just Bitcoin divided by US dollars, but something that I find very interesting is that Bitcoin divided by the M2 money stock actually came down significantly lower than just Bitcoin USD. So just keep an eye on this high right here. We'll jump back and forth between Bitcoin USD and Bitcoin divided by the M2. This is a very significant level, right? Lots of weekly support right here. So this is basically July, middle to end of July 2019, when this bear market rally topped out. During the FTX capitulation, we came back and had a perfect retest of that support. Now if we go to just Bitcoin USD and we draw that same line right over here, you can see that Bitcoin, just normal Bitcoin USD, didn't come back to retest this key SR level during the FTX collapse. So Bitcoin, you could argue, adjusted for the increase in money supply, is actually trading much cleaner when you adjust for M2. This was a really hot level right here that a lot of traders were hoping was going to get retested, on just the normal USD chart. It's basically our previous demand zone. This was previous accumulation right here before the rapid expansion, post Bitcoin halving in 2020. So we never came back to that level. Time will tell if we do. I would argue we're still in a bear market rally right now for Bitcoin, at least. So it's possible we come back and test this level. It's definitely a little bit of a ways away, but it's very interesting to see how clean this is trading here. So I would say that if we did come back again and Bitcoin actually was going to roll over here at this mid range, potentially another level to look out for would be this key SR level for Bitcoin as adjusted for the M2 money stock. So potentially, coming back and, actually making some sort of potential divergence here, or, maybe we come back and kind of complete a 3 drive and, we basically test this next key SR level. And this is a very important one, but I think more than anything, it's not so much about catching the exact bottom, but trying to pick your spots and decide, when it's time to start deploying, and, choosing how aggressive you want to be. And, you don't necessarily have to catch a knife, but this is definitely an area of interest right here. So either, another retest of these levels that, we hit during the FTX capitulation. So maybe we come back here, maybe not, who knows? Or maybe we even go below. But this is, this red box for Bitcoin as adjusted for the M2 money stock is definitely an area of interest. So keep an eye on that. And what it implies for, Bitcoin USD is, it's difficult to say because it depends on, if M2 is back to increasing or continually decreasing from here. But again, I would just keep an eye on this, set some alerts. If we come back to that red box, it's definitely an area of interest for me. Let's jump over to Bitcoin as adjusted for, not adjusted for, Bitcoin as a ratio against the Nasdaq. So one very important barometer for me gauging, how I'm performing, as a crypto investor is, am I outperforming just DCAing into the Nasdaq? The Nasdaq, over the past decade, 2 decades, maybe a little bit longer, has been a really solid investment. Most people just contribute mindlessly, their 401k, their 401k investments on a weekly, bi-monthly, whatever basis. And I like to think that if I'm investing in crypto and I'm taking on additional risk, I'm at least outperforming that of people that are just DCAing into, simple, Nasdaq or S&P 500 ETFs. So very similarly to Bitcoin as adjusted for M2, Bitcoin, compared to as a ratio against the Nasdaq, also came back to test this very interesting and important level. As you can see, similarly to M2 or Bitcoin divided by M2, we came back and we retested this level. So I guess the question remains here: are we going to come back down and retest it again? Time will tell. And for those that you don't know what you're looking at here, basically if this chart is going up like this, that means that Bitcoin is outperforming the Nasdaq. If it's going down, that means that the Nasdaq is outperforming Bitcoin. So I think it can be a very useful ratio in determining, maybe I want to buy stocks here, or just swap my Bitcoin into a Nasdaq ETF for the time being, and then rotate back when it comes back and retest some important levels. But again, I would probably set some alerts here on TradingView. BTC as adjusted for as a ratio of the Nasdaq. I'd say if we end up losing this level, next pretty obvious SR level would be somewhere around here. So that could be pretty aggressive, right? That could definitely be pretty aggressive if we came all the way down there. But keep an eye once we're in this region. Definitely consider, maybe if you're interested in crypto, and you see BTC divided by Nasdaq coming down into this region, you say, well, I've been interested in investing in crypto for some time. Perhaps now would be the time to rotate out of the Nasdaq and into Bitcoin. So keep an eye on that level as well. Now let's talk about Ethereum. Here's Ethereum adjusted for M1. So pretty interesting chart here as well. Just taking note to some levels. This is a very important level on the chart. Maybe we come back here and, hopefully we hold, but, if we don't, then I would assume we could probably come back down as deep as this and actually make a new low. So just, again, I'm more focused on Bitcoin right now because, ETH is going to be a little bit more volatile, but I'm very interested in Ethereum as a long-term investor as well. So ETH adjusted for M1, pretty interesting levels down here also. Maybe we see something like this. It kind of looks like it's starting to roll over a little bit here. So definitely keep an eye on it. But it's interesting. It's really just been ranging. Kind of comparably to how Bitcoin was against M1. If you were interested in rotating out of ETH, basically the 2018 high was give or take sort of the same region that we got rejected from again here in 2021. And then similarly, when we come down here, potentially, this could be your buy zone again, wherever this ends up being. If we want to keep it as simple as this, sell at the top, buy at the bottom. It's just in one giant range against M1 money stocks. So keep an eye on this as well. Let's go over to Ethereum as adjusted for M2. Similarly to Bitcoin, it's trading very cleanly. This is a very key weekly SR level right here. And when we capitulated here in early summer of 2022, we came down and retested it perfectly. Something to keep an eye on, of course, is this level right here. This is a really, really important level. As you can see, we've had multiple interactions with this trend line, and this is Ethereum as adjusted for M2. So I would say if we do end up kind of rolling over here, and it depends on a lot of things. It depends on, if M2 is increasing or decreasing, but if we do end up rolling over here, I would say first point of interest would be a retest of this SR level where we bottomed back in June of 2020. And if we lose that one, I would say just be a little bit careful for sure. Just be a little careful because it's possible we come back and retest all the way down here, which, would imply a pretty nasty drop. So, from here, that'd be pretty aggressive, right? That would be very, very aggressive. So let's check out ETH divided by Nasdaq. Again, ETH trades a little bit closer. I believe it's a tighter correlation to the Nasdaq than Bitcoin. So very similarly, what could we expect here? Well, this is a pretty key SR level like we've talked about, very similar to the other charts. But again, careful, because if we lose this level, and you can see here that we've basically kind of just been buoying on top of this level right here. If we lose this, there's a lot of error right here. I mean, this is a major inefficiency in this chart. Time will tell if we need to come back and retest it, but if we start, if we lose this level here for ETH divided by Nasdaq, it's a little bit spooky what could potentially happen. So what this chart would mean is, if it's moving up like this, that means that ETH is outperforming Nasdaq. And if we're moving down, that means that in theory, Nasdaq would be a better hold than Ethereum. ETH will bleed more than the Nasdaq. Or I guess on the flip side of that, the Nasdaq's been performing very well this year. ETH has had a decent year as well, but you can see that basically the ETH Nasdaq valuation has been bleeding pretty consistently here. So the Nasdaq's almost at all-time highs. ETH is still significantly off of its all-time highs. So that would mean that if we're bleeding as well, the Nasdaq could just be outperforming Ethereum to the upside. And that's potentially the case, right? Like if we get a crazy Nasdaq bubble and we go to all-time highs and ETH just ranges, you could see this ETH Nasdaq valuation plummet, and the US dollar valuation wouldn't really move too much. So anyways, just some thoughts here. We're going to do a little bit of TA here just to wrap up on ETH USD. This is definitely a point of potential concern for me, something I'm keeping an eye on, and you can decide how important these legacy trend lines are. But this is a little bit concerning, not gonna lie. It looks very, very weak. So the question remains, if we do break this trend line, one, does it matter? And two, if it does matter, where do we bottom? And a pretty obvious spot, I think, would be somewhere in this region. And I know a lot of people probably don't want to hear that, but it's definitely something you should keep an eye on, because I think a lot of people are potentially going to be trying to, net worth shove ETH longs at 1290 if we break a little bit. But typically when these legacy trend lines break, you get a sustained bear market longer than most people would appreciate. So let's look at some other legacy trend lines that have broken before. Here's a pretty significant one from early on that once it broke, we entered basically a prolonged accumulation phase. So you kind of had, one bubble, two bubble, then we broke and we entered a prolonged period of accumulation, and then we had another period of expansion. So if we're going off of sort of this 1-2 bubble, you could just slide this here, move it this way, and grab our drawing tool. And actually, I'll remove this now. Just remember that. But you could draw it like this, and you could say, 1, 2, and then, potentially if we break, you would enter, an accumulation phase down here, similarly to what happened, over in this region, if you remember what I just drew. So I would say keep an eye on this legacy trend line. It's definitely a little bit concerning, because last time we saw legacy trend line break, it wasn't exactly the most prosperous of times for Ethereum. But time will tell. Time will tell if it matters or not. We could also, maybe put in a very predatory deviation below this line, something down here, and then reclaim. And this was like your mega bear trap. So time will tell. But either way, I'd say if I had to pick one chart that was the most interesting, it would be Bitcoin as a ratio of M1 money stock. So keep an eye on this. The equation for it is right up here, BTC divided by M1 SL. And you can see that when we've come back to retest our range low here, this has typically been a very good time to enter the market. So I'll be keeping an eye on it, as we're rejecting from this mid-range, or appear to be rejecting from this mid-range right here. I'd say my eyes are down here. I'm just kind of playing the range for now. And until the range breaks either direction, I suppose it makes sense to play it. So anyways, guys, that's all I got for you today. Thanks so much for tuning in. If you did enjoy the video, please consider liking and subscribing. And also there's a link in the bio to our website where you can sign up for some of our premium services as well. We are offering a free trial of that as well. So if you want to trade with me and the entire Because Bitcoin team, yeah, definitely consider checking that out. We have a pretty awesome Discord. So guys, thanks so much for tuning in, and we'll see you next time.